Good evening, everyone. I'm Joe Kernan, and this is the Kudlow Report. Larry's under the weather tonight, so I'm filling in. I've got the shirt. I've got the suit, pinstripes. I've even got the cufflinks. And now it's CNBC contributor Don Luskin, Chief Investment Officer at Trend Macro, famous for his piece in the Journal today. Fast Money contributor Brian Kelly, the co-founder of Shelter Harbor Capital, and Steve Cortez, founder of Veracruz and author of Against the Nerd. Well, I'm sorry.
Against the herd.
It's against the herd. It's against this teleprompter's far away, Steve. I'm sorry. All right. Boy, that's embarrassing. Don, let me start with you. I can't tell whether you're bullish, overly bullish, or just I don't know whether I'd call you sanguine. Are we overbought, or is it the early stage of a nice move, maybe up above 13,000 and beyond?
Well, first, I want to get one thing on the table. I am pro-nerd. All right?
That's what I was saying. Really, that was why I made that point. I don't like excluding anyone. I think it was directed at Brian Kelly, which I don't think is very nice.
Well, hey, listen, I'll take whatever I can get, you know?
Right. So, Don, to be perfectly honest, I talked about 30% at the beginning of the year, and now I've backed it up to that I was actually talking about it in October. I think I've already got about 25%. But aren't we due after 10 or 11 years, and with rates at 2%, and with stocks, some stocks, quality stocks yielding 4%, trading at 11 times earnings, can't we do a big number for once, or will something hold us back?
Well, we're certainly entitled, Joe. I mean, we've got a situation where it's exactly what you say. If you look at any rational historical comparator, the level of forward earnings so high, the level of interest rates so low, we could get the S&P 500 all the way back to where it was last year in April, which is where it topped out for a while. So to return to that level of valuation, that would be about 35% higher than we are now. That's how much earnings have grown, how much interest rates have fallen. So we're due. And so you take some of those end-of-the-world threats off the table, like the European threat is coming off the table, all of a sudden investors, one by one, they're coming to their senses, they're looking at that same arithmetic that you and I just went over, and they're saying, you know, stocks have got to melt up. The world ain't so bad.
People don't believe it can happen, Don, because
that's what I like about it. That's why it keeps going.
When was it? 94?
When everyone believes it, that's when you sell.
90. Love your piece today, Don. I think we can show you the Europe supply side.
Thank you.
Revolution. That depressed me though, because it just seems like they are finally getting religion over there, and they didn't get religion till all this happened, and we're over here sort of fiddling. And the things that work, the structural changes we need with the labor market, et cetera, we're headed the other way. We're still headed the other way because we haven't had that day of reckoning yet. Is it depressing from that point of view?
This is why I can argue with confidence that even Europe can be a growth story, because in economics and in investing, all the important action takes place at the margin. It's all about change. It's not about your starting point. It's about change. Europe is changing for the better. It will grow. Look at China, a totalitarian dictatorship that put on just the tiniest veneer of freedom and capitalism, and look what they've done. Now, we are still the freest large country in the world, but we're moving in the wrong direction. And look at how it is crippling our growth. So Don, we are putting ourselves at risk right now of being marginalized, not just against Asia, but against Europe, for goodness sake.
Who wants to? Is that
Don, question for you.
That was the nerd talk. Okay, it's not that. It's Steve.
It's Steve Cortez. Question for you. And listen, I disagree. I think the only place to invest right now is the United States. I agree with you in terms of your article in that, yes, Europe is tinkering at the margins, but they still have systemic problems, particularly in the periphery, but even in Germany, that will keep them from growing. But I guess my question to you would be,
well, then why has Germany had better growth than the United States over the last 5 years? That's just, you're just starting from a false premise.
Over 5 years. It didn't last year. It didn't last year, right? And last quarter, for instance, the entire Eurozone declined in GDP. And more importantly to me than the GDP data is financial markets.
Germany's business cycle lasted. Germany peaked later, troughed earlier, has had more growth since the bottom, went to peak output sooner. The German have a 5.5% unemployment rate. Can we please have a 5.5% unemployment rate?
Hey, Luskin.
God bless America.
Yeah, exactly. Exceptionalism. Brian Kelly and the really sartorially splendid Steve Cortez. You are against the nerds.
I'm channeling Larry Kudlow as well.
I am too, completely. Do you have W cufflinks or Reagan cufflinks? I don't think you do you?
I've got cufflinks on.
But not Reagan.
No, they're not Reagan.
Well, you don't have those.
I've got Cartier cufflinks. Does that count for anything?
Oh, okay, yeah. It stands for Eurotrash, usually. No, I'm sorry.
And I'm just the nerd with no cufflinks.
All right, coming up.